the gain in the materials sector really underpinning today's local market strength. We also saw a big pickup in volumes on the market today, especially given the dismal performance in volumes we had just last week. In your view, is this really underpinning that optimism that Michael's talking about?
Maura, the positive thing is that we have seen volume rising on the back of this gain that we've seen this week. Today was a little bit unusual in that we did see index derivative expiry, and that did distort volumes. In the first half hour of trade, we'd already seen more than $1 billion being traded, and by the first hour we'd surpassed that $1.3 billion level. $4.6 billion traded, so the best volumes that we've seen for the week so far, but it really is time to pop open the champagne. Once again, the Australian share market hitting the highest level for the year. If we have a look at the Australian market over the last 52 weeks, this is what the chart looks like, and you can see that impressive rally that really started on the 3rd of June, where we've seen the Australian market up by 12%. Now, the unusual thing about this rally is that it has been driven by the defensive areas. It's been the banks, the healthcare, the consumer staples area, which has really driven this rally. If we have a look at the big four banks, they're up more than 20%, with the one exception of Commonwealth Bank since the 3rd of June. We've also seen stocks like CSL gaining 26% in the healthcare space. Wesfarmers up by 20%. These are usually stocks that you don't see gain a lot of momentum in terms of capital growth because they're seen as defensive stocks, and yet this is what's driven the rally over the last few months. Today was a little bit different because we did start to see the growth areas of the market really see some strong buying, and that's the materials and the energy space. It was all about the big end of town. If we have a look at the ASX 20, the blue chips on our market up by 1%. In comparison, the mid caps were only up by 0.3% and the small caps up by 0.8%. So it was all about the big end of the town and big miners. BHP up by 3.2%, Rio Tinto up by 4.8%, Woodside Petroleum up by 2.4%, and Leighton's up by 3.3% in the industrial space. So a fantastic performance by the Aussie share market and really some confidence coming into the market.
News for 10 investors, the full year profit result really missing the mark, a loss in fact of $13 million versus expectations for earnings of $15 million.
We did see the result coming in below expectations. We were expecting to see $14 million, and the profit from continuing operations came in at $6.1 million, so underperforming there. But the key driver of TEN's share price has really been this expectation of a capital raising. We've seen the IR Corp sale being delayed, and that's really led to some weakness in the share price, with 10 shares reaching an all-time record low yesterday of 30 cents on the expectation of a higher probability that 10 would need to raise capital again. Some of that thinking was hosed down today by the CEO of 10, saying that a capital raising wasn't imminent, and I think that was behind how the share price reacted today, because we actually saw a gain of 0.5% despite 10 missing the mark in terms of its profit results. So I guess it is expectations of a capital raising that has been driving the shares, and the fact that we didn't hear of any imminent capital raising today was a little bit of a relief, and we actually saw a rise of 0.5%.
Michael, Bank of Queen, the show. Julia, unusual trading in ANZ this morning. Just share with our viewers what's happening here.
It was pretty dramatic in ANZ on the opening. There were some other stocks being affected, but ANZ by far, in terms of the price action that we saw, was the dramatic. If I can just go to the ANZ intraday graph and show you exactly what happened. This is ANZ today, and I'll just try and emphasize just what happened on the open. Maybe if I stood to this side, but you can see exactly what happened in terms of the price. It does look like on the opening match that we may have seen a big seller stepping out of the way, and that means ANZ shares, 836,000 shares went through at the open at $27.63. Just 1 minute later, the shares had already fallen more than $1 down to $26.28, and ANZ shares actually finishing the day at $25.95. So no doubt there would be a lot of traders quite unhappy with the movement in ANZ shares. This coincides with options expiry for the index, and it does look like the SPY futures settlement price is around about 4,606 points. And of course, the Australian share market, the benchmark index, didn't get anywhere near that today. In fact, the high that we saw for the Aussie share market, the cash market, was 4,581 points. That's a difference of 25 points. So the stocks that have been affected on the open by some unusual trading activity are ANZ, Ansell, Aristocrat Leisure, as well as AGL Energy. It does look like there is an informal ASIC investigation to see whether the market was being manipulated happening, but certainly a lot of traders talking about the open today and also the index derivatives expiry and the impact on that settlement.